Breaking news: as of July 2025, the United Kingdom's state pension system is undergoing its most significant transformation in recent years. 5 major changes are now being rolled out that could drastically affect how pensioners receive, track, and qualify for their retirement income. These updates have already been confirmed by the Department for Work and Pensions, DWP, and are actively being implemented through benefit offices and local councils across the country. If you're age 60 or older, whether already receiving your pension or preparing to claim soon, these changes are not optional. They are not small adjustments. They are critical updates that could affect your payment dates, your access to entitlements, and in some cases, whether you remain eligible at all. Failing to act or prepare could result in missed payments, account suspensions, and even permanent loss of funds owed to you. What makes this even more urgent is that all 5 changes are happening within the same month, July 2025, leaving pensioners with a short window to respond. Let's break down exactly what's changing and what actions you need to take to stay ahead. The first major change took effect on Friday, July 4, and it directly affects the state pension payment schedule. Until now, pensions were paid based on the day of the week, typically spread from Monday to Friday. That system is now being replaced. Going forward, your payment date will be based on the final 2 digits of your national insurance number. The DWP says this is meant to ease the pressure on banking systems and speed up transactions. But in reality, many pensioners are finding their payment dates have shifted, some moved forward, others delayed by several days. For those living on tight monthly budgets, that could mean bounced direct debits, missed rent payments, or overdraft fees. The DWP is sending out letters with your new payment date, but if you've changed your address or haven't updated your contact details, you might not receive it in time. To avoid surprises, it's strongly advised that you check your national insurance number, view the new payment schedule online, or contact your local benefits office immediately. The second change arrives on Tuesday, July 22, with the launch of the State Pension Dashboard. This new online portal will serve as your main hub to view contributions, entitlement forecasts, payment history, and even submit correction requests. Built in collaboration with Revenue and Customs, the dashboard is designed to improve transparency and efficiency. However, it also introduces new challenges. More than 4 million pensioners in the UK do not regularly use the internet. Many rely on paper documents, face-to-face support, or help from carers. Although paper copies of pension statements will still be available, they must now be requested explicitly via a form. And those who opt out of the digital system may experience slower service or delays in processing changes. While the DWP has committed to improving accessibility, the adjustment burden is still falling heavily on pensioners. If you're uncomfortable with digital platforms, now's the time to get help, or make sure someone close to you can assist in navigating this new system. The third change, which started on Wednesday, July 10, tightens the rules around eligibility checks for both new applicants and returning UK residents. In addition to meeting national insurance contribution requirements, you'll now need to prove that you lived in the UK for at least 10 qualifying years. While this rule has technically existed before, enforcement was inconsistent. Now, departments including HMR, the Home Office, and the DWP are sharing data to verify physical residency. You may be asked to provide documentation such as council tax records, tenancy agreements, utility bills, or payslips. For individuals who've worked abroad or spent time living outside the UK, even if for a UK-based employer, this could cause serious delays. The DWP has already confirmed a backlog of applications flagged for further verification. Worse yet, any application not resolved within 30 days may be automatically suspended. This change will especially affect returning expats, migrant workers, and carers with incomplete documentation or outdated records. If this might apply to you, act now. Don't wait until your claim is frozen. The fourth change, set to begin on Monday, July 15, targets the more than 500,000 British pensioners living overseas. Until now, those living abroad had to send in a paper life certificate each year to prove they were alive and still living at their declared foreign address. That process is going digital. The DWP, in partnership with Passport Office and international embassies, will now use biometric passport data and digital consular records to confirm pensioner status abroad. While this new system may reduce paperwork, it introduces serious risks for those with expired passports, outdated embassy records, or limited internet access. If digital verification fails for any reason, your pension payments could be paused without warning. And restarting those payments may take 6 to 8 weeks, a serious delay for anyone depending on that income. While appeals are possible, they require contacting the International Pension Centre and submitting updated documentation. To avoid a sudden stop in payments, overseas pensioners should update their digital records immediately. The fifth and final update, which began rolling out on Friday, July 12, is focused on correcting underpayments from earlier this year. During the April and May 2025 implementation of the triple lock pension increase, many pensioners were accidentally underpaid due to a system error. The full state pension was supposed to rise by 6.9%, but for hundreds of thousands of recipients, particularly those with reinstated or deferred pensions, the increase wasn't applied properly. The DWP is now issuing one-time correction payments, which will appear in your bank statements, labeled as double up. The new full weekly state pension is £233.80, while the basic rate has increased to £178.50. However, many pensioners may not realize they were underpaid, especially if they weren't closely tracking changes in April and May. If you think you were affected, compare your previous payments with the July correction. If anything looks incorrect, you must report it within 90 days after that. You may lose the right to appeal or claim what's owed. When taken together, these 5 changes represent a full-scale transformation of the UK's state pension system. While they're meant to improve accuracy, efficiency, and fairness, they also shift more responsibility than ever onto the shoulders of pensioners. The era of passive payments and automatic corrections is fading. If you're not actively checking your accounts, verifying your documents, and ensuring compliance with new rules, you risk falling behind, and once you're behind, catching up could be slow and difficult. That's why organizations like Age, UK Citizens Advice, and many local councils are urging pensioners to take action now. Set up or log into your gov.uk account, request your national insurance contribution history, confirm your new payment schedule, double-check your bank statements, and if you're abroad, make sure your passport and embassy records are updated. Being proactive today could save you months of stress and protect your hard-earned income. Thank you for watching. If you found this update helpful and want to stay informed about future pension changes, benefit updates, or government reforms, subscribe to my channel and turn on notifications. Don't wait for someone else to explain it to you. Stay one step ahead and protect your retirement. I'll see you in the next video.